Okay. Meantime, there's not been much to smile about these days when it comes to jobs data as millions head to the unemployment lines. But yesterday, St. Louis Fed President Jim Bullard said the U.S. economy is not in free fall despite a 32% unemployment projection. Steve Liesman joins us now with his take on Mr. Bullard's comments and more. Steve, what do you make of that? Because he's been positive and negative. He thinks there's a V shape in this, right?
Yeah, that's sort of the consensus out there, Andrew, that you have this very steep drop and it's followed by a reasonably strong rebound, though there is some debate about that. We retallied our averages, and what's happened is most of the consensus now has moved towards the worst case scenario in the second quarter and then a bounce back. Let me show you the numbers that we compiled over the weekend after that terrible jobs report. The first thing that's happened is everybody agrees the first quarter, which was going to be positive, now is a negative quarter of minus 5%. That's the consensus view. 7 forecasters, including in this poll. 27% decline now. Remember, we had those eye-popping numbers, 25, 30, but a couple folks. Everybody is now on board with this idea that once you layer in the stimulus, which is important here, and then you count what's left in terms of the losses, would have about a 30%, call it, decline in economic activity. That's followed by a 14% rebound and a 10% in the fourth quarter, and then again above trend. So it's not exactly a V. It's kind of, call it a modified V, which is a boat term, by the way. But in any event, you have this bounce back in the third quarter, fourth quarter, and first quarter. But it's not necessarily assured. Oxford Economics went back and they studied a bunch of other kind of shocks to the system like this. Let me tell you what they wrote in their study. The coronavirus may trigger annual GDP declines among the worst seen in the last 100 years. Okay, we know that. Economies can bounce back sharply. That's good news after such declines. But our analysis suggests output losses also endure in a significant number of cases. Depends on the kind of shock that's out there as to whether or not you get the bounce back. Also critical is the assistance that we get or that the government does provide. Very critical to outcomes. And Goldman Sachs says, you know what? We're going to need more. Further fiscal support, they said this morning, for the economy looks likely to be needed. The measures enacted to date, while substantial, are not yet equal to the lost income due to COVID-19 that we expect. Did some back-of-the-envelope work with John Riding over the weekend. There are some holes, particularly the biggest hole pointed out by Goldman guys is the assistance of the federal government to the states. Because when you figure what's been lost, you figure the government keeps paying. Well, that can only be true if the federal government helps the states. So that might be, Andrew, the next area of assistance out there.
Hey, Steve, the big question I'd ask is the timeline that these economists are using. When you hear Jim Bullard or others talk about a V or something, a modified V or whatever you want to describe it as, is the view, when you hear from them, at least on our show, they often talk about the world coming back online in June or even May. What I don't understand, though, and I'm trying to grapple with, is you hear from Dr. Scott Gottlieb and so many other health officials who say, sure, we may all be back at some kind of modified work coming back online then, but we'll all be wearing gloves, we'll be wearing masks, we're not going to be getting on airplanes, we're not going to be eating at restaurants, we're not going to be going to hotels, we're not going to be belling up to the bar, going to sporting events, all of those things, not going to walk into a bookstore, all of those things that would have happened. And I just want to understand if that's baked into, and by the way, he's suggesting that may not happen through the fall, not just the summer, but through the fall and potentially even into the winter. I asked him about whether he'd get on a plane to go, to visit family at Thanksgiving. Is that baked in?
No, Andrew, let me be clear about the trajectory of this. The economists are not leading the epidemiologists on this. They know that would be stupid. They're following. And what's happened is a decline in the outlook relative to increases in the forecast of the severity of the disease, the contagion of disease, and the length of the shutdown. So right now, they're baking in this idea that by the third quarter, America gets back to work, and you would have a fairly powerful rebound in GDP if that happens. However, if all the things, look, who would I rather listen to? JPMorgan, those guys are very smart. I'd listen to Scott Gottlieb over Mike Ferroli any day, with no disrespect to Mike Ferroli. And I think Mike Ferroli from JPMorgan would say the same thing. So they're following this outlook, and it may be, Andrew, that what we get is a second downgrade to the third quarter if the shutdown lasts longer.